Hi everyone and welcome back. Again, me Eugene from Approved MSB Services, a proud member of CBES Canadian Business and Enterprise Services. In today's video, I would like to clarify a number of points that I hear from many of our MSB clients addressing the issue of safeguarding clients' funds, what is required under the regulations of the Bank of Canada, operating in compliance with RPAA, Retail Payment Activities Act, what are the definitions of the safeguarding account, to which MSBs it apply, and how to make sure that your business operates in compliance with the regulations of the Bank of Canada. So let's start with the first question: to whom do these specific regulations apply with regards to safeguarding of clients' funds? Under the definitions implemented by the Bank of Canada, the MSB is considered as holding clients' funds only in those situations where clients' funds are being sitting with the MSB at rest without instructions to transfer the funds, to exchange the funds, or to do any other transactions with the funds being attached immediately to the funds. So any situations of prepaid cards, prepaid balances that the client can use in the future, online bank accounts, e-wallets, and other similar products will comply with the definition of holding clients' funds. Such situations of currency exchange, international transfers, payment settlements that are done within same or next day usually do not comply with the definition of holding clients' funds, even if in the case of international transfers like Western Union, you would hold clients' funds for a period of time, but until the recipient comes and picks up the funds from your office or asks you to deposit it to their account. Now, what is safeguarding account? What are the requirements that the Bank of Canada applies to the safeguarding account? So essentially, safeguarding account is the any bank account operating by a financial institution, either in Canada or outside, that complies with the regulatory regime similar to that applied in Canada. The safeguarding account does not require any special safeguarding measures for that matter, and the only requirement is that this account will be segregated from your corporate or personal funds as an MSB, and also within that account, the funds of each client would be segregated from the other clients. So any bank account that allows you either a functionality of opening multiple client accounts or opening sub-accounts for each client where the funds are being segregated will comply with the definition of safeguarding account. In addition to the actually setting up a safeguarding account and making sure that clients' funds are being held there, one additional requirement is being implemented by the Bank of Canada, and that's ensuring that the funds of the clients are being secured while they're being held by the MSB. In this perspective, secured means one of three alternatives. The first and the most straightforward alternative, although the least accessible for most MSBs, is to open a settlement or safeguarding account with a Canadian bank that is being secured and insured by a mandatory insurance scheme operated by the provincial regulators in Canada. A second option is to hold clients' funds in trust, and special rules apply to specifically situations where MSBs hold clients' funds in trust. The rules require a special legal opinion, and I would suggest, if you consider this option, to talk to us in advance. I will do my best to assist you with setting up a proper trust in compliance with the requirements of the Bank of Canada. Finally, the last option, and probably the most accessible to most of our clients, would be to obtain an insurance bond, which would be covering the maximum amount of clients' funds being held by the MSB at any given time. So essentially, you have to work with your insurance provider and to make sure that the bond that is being provided is such that it could be either increased easily at any given time or at the amount that will exceed your forecasted holding of clients' funds for the foreseeable period. The Bank of Canada also expects you to conduct an annual assessment or periodic assessment of your operations to make sure that you increase the insurance bond as the need arises. So to summarize today's presentation, first, make sure that you fall under the definition of MSB holding clients' funds. Essentially, that your clients' funds are being stored with you at rest without any instructions being attached to them. Second, open a proper bank account with a Canadian or international bank. When you select an international bank, make sure that the bank operates under a regulatory scheme similar to the Canadian regulations applicable to the banks. Essentially, almost every bank regulated by its government in the country where it's located will comply with this requirement. You just have to make sure that that is the case. Once you have established the bank account, make sure that you have a proper security in place. So either in Canada, that will be automatically insured, or if it's an international bank, have an insurance bond, or make sure that you set in place a proper trust agreement with your clients. So thank you for being with us today. Again, me, Eugene. If you have any other questions, please send me your questions by email. My contact information is on the screen right now. We also will put it in the comments below, and I'll see you soon with new videos.